All right, welcome everyone to the Sky Community Call weekly session. Today we'll have Rune again speaking out, taking potentially migration, allocation system, and answering any other questions that you guys might have. And if Rajiv can solve his connectivity issues, he'll be giving us always the status of the rewards and the different levels of USDS that we find in different ecosystems. So Rune, if you want to start.
Yes. Welcome everyone to the community call. So I will be talking about two things and taking questions and like on each of these topics. So the first one is I want to talk about the allocation system because this is just, I mean, it's going to be a recurring theme. I think that everybody will be discussing over and over on community calls and Discord everywhere, just because the allocation system is really, it's like the most interesting aspect of Sky and of the stars, and it's like the thing that's going to define so many of the stars and define USDS and the success of the whole ecosystem. And it's also very complex. It's like pretty hard to understand. It's a lot more advanced than like the original multi-collateral DAI system of Maker that we originally thought would be enough to endlessly scale a stablecoin, but it turns out no, that's not enough. You need something way more flexible. And yeah, I'm just gonna share my Scally draw and just show some different drawings to talk about this. There we go. Oh, I haven't tried this before. Okay, there we go. Yeah. All right. Okay, so this is, I mean, first, just very simply, just defining Sky Agent framework and stars, right? Because this is really like, this is a key building block to kind of make the other pieces of the system make sense. So all of the stars will be created through having a founder that interacts with the Sky Agent framework in order to create a star agent, and then some investors that inject capital into the star in one way or another. It could be a public sale, this could be private funding, this could be a seed round. It could even be the founder itself having its own capital. And this is already happening in some cases where you have like ecosystems that also have capital and that are interested in setting up a star dedicated to their own ecosystem. But then once the star is created, the tokens are distributed between the founder and the external capital based on their original agreement. So this, it kind of looks, it's comparable to how you have a startup being created and capitalized, something like that, right? But instead of being a company, it's really a smart contract connected to the Sky protocol, and then it is also basically a so-called artifact, basically a governance mechanism built into the broader Sky governance framework, which then can control the smart contract infrastructure that the star has. And then that's where everything gets started. Like, so then basically it's ready to go. And then the token can be distributed further to a broader community through farming or through sales or whatever the founder and the investors want. And then you have sort of a fully fledged autonomous DAO, if that's what you want, or something that's more like a tokenized agent. That all depends on how you actually want to set up the Sky Agent framework, or rather, how you want to set up the star using the primitives in the Sky Agent framework, which is kind of the building blocks that make up the star. And then, so the primitives are, so basically, this is a good example here. The primitives are these like building blocks that the stars have access to that gives them different basically special features that they can tap into. And just like the really the most basic two Sky primitives to care about is the allocation system, which I'll be talking more about, which is all about deploying the collateral of USDS. So this, you can think of this as like the supply side, basically. So this is where the USDS sort of comes from. This is where the stability comes from. And a way to use the allocation system is, for instance, Spark, right? So Spark is powering Sparkland through the allocation system. So they basically used the Sky primitive to bootstrap an entire lending protocol. But it's also being used by Spark to deploy into Aave, for instance. So the allocation system can also be used for external protocols. You don't have to use it for the Star's own internal tech. And yeah, and again, this is like how this basically replaces, but in a much more flexible, much more powerful fashion, it replaces the old MCD system where there was like a single place that you could go to borrow from Maker originally in order to create the DAI stablecoin. With USDS, instead, it's kind of created all over the place, much more dynamically and much more flexible. And then just quickly, I will just mention the accessibility reward. And actually, if we get Rajiv back, then he can also talk about, like, there's the recent accessibility reward FAQ. So in case people have read that and have questions about that, we can also get a little bit into the accessibility reward. But the very basic description of it is that this is the demand side driver, right? So while the allocation system is this Sky primitive, so this like basic toolkit that a star can use in order to basically generate profits from deploying the USDS collateral in a way that helps generate value and good risk-adjusted return for Sky and USDS holders. The accessibility reward works on the demand side. So this is like how stars can generate a profit from basically attracting users to hold USDS. And so here you have the same thing with Spark as an example, where Spark.fi is a savings app that users go to in order to save up their money, and they can save with USDC, for instance. And then they even have a product called SUSDC, which is really all the same thing. Like it's always that in the end it taps into USDS and the Sky savings rate on the back end and delivers a really attractive risk-adjusted return to the end user. And then by funneling those users, by helping the ecosystem in attracting those users and creating more demand, the star is rewarded with the accessibility reward, which is, I mean, simplified, which is simplified, can be thought of as being a 20 basis points bonus that the star gets on top, or rather, that the star basically gets, right? So Sky pays out both the Sky savings rate, which is currently 4.5%, and then on top of that 4.5%, it pays out 0.2%. But that doesn't go to the user, that goes to the star. And that way, the star has a way to like fund marketing efforts and actually grow its user base and create a sustainable business model on that. Okay, so this is all the intro to getting deeper into the allocation system specifically. But before I go any further, I will just see if there are questions to this so far. Okay, also seems like Rajiv is back, so that's cool.
Yeah, are you there, Rajiv? Is your sound working?
Yeah, apologies. I'm not sure what happened. The call just didn't start for me.
Yeah, okay,
No
well,
worries.
I mean, let's go into the demand analysis then, because now I just talked about accessibility reward a little bit, and before I get super deep and super technical, it would be cool to go over that. So let me just, yeah. Oh, you already kicked me off. Great. All right.
Let me just share my screen and hopefully this comes up. You all see that okay? One?
Yes.
Okay, great. I'll do the apologies for the delay and the technical issues, but I'll do the usual summary of the demand side trends we've seen over the last week. And I'll start with the wider competitive landscape. I think the standout trend here is very much BUIDL for the last week and actually the last month. You can see the traction it's gaining. And if we sort of take a deeper look at what's driving that, no surprises. It's been the allocations from Sky ecosystem via Spark. And I'm sort of think in this sort of low DeFi rate environment, we're going to see more of this. But the interesting thing is just, if you look at who are the big holders behind Biddle now. It's sort of Athena and Spark up there with maybe 80% or so. You also see Ondo and Frax, and I guess the trend is Biddle very much continues to establish itself as a preferred on-chain collateral for the wider stablecoin segment, and particularly in this environment of low DeFi yields. Looking and jumping into what we're actually seeing within the Sky ecosystem and USDS, it's actually been a very mixed bag over the last week. And in the first few days following our last community call, everything was trending up very nicely. You sort of see that in this sort of period following our last call. And then on Sunday and Monday, we started to see a lot of withdrawals. And normally, when we sort of see these big moves, we can always point it down to a few single drivers, but actually, it wasn't very apparent. We sort of saw it across all our big three holding groups. A big user on a big USDS hold depositor on Aave was making withdrawals. We also saw withdrawals from the token rewards feature, less so, but sort of carrying on some of that recent trend, and also from Sky Savings. So our big three were actually showing withdrawals over that 2-day period that compensated for what we saw in terms of the ongoing growth in the first half of the week. And actually, if we take out the top three, it was actually, across the other holding groups, it was a positive week, mostly driven by the increased USDS allocation on Sparkland. But of course, those top three are such a big weight of USDS holdings, Aave, Token Rewards, and Sky Savings, that the net result for the week has been negative. And trying to sort of break it down and look in detail as to what the main drivers are, as I said, it sort of seems to be across the board. If we look at Token Rewards and some of the drivers there, we saw Nexo reducing their positioning. In the other category, which sort of represents the long end tail of smaller holders, we also saw withdrawals from the Token Rewards offering. And if we look here on the left side, specifically within the savings contract, I talked about having that mixed bag of a positive first few days, followed by withdrawals on that Sunday and Monday. You saw that across a few of sort of where integrations where the major holdings are. So Curve, which has seen great traction through the month, had that negative period, even with US Spark, USDC, great traction throughout the month. It had a few days there where we spotted these withdrawals. And of course, the big driver with any trend, it's always these whales. So over that 2-day period, there was major movements from some of the whales. It was actually just two of them. And from what we could tell, it was withdrawals from Sky ecosystem that ended up in Binance. And so those are the major updates. And I just posted as well on the forum a link for the FAQ for accessibility rewards, as we discussed last week. But if anyone has any further questions or follow-ups, please feel free to reach out to me directly for that. So I think that those are the major updates for the week.
Yeah, nice for that, Rajiv. I don't know if there's anyone with questions regarding this. Otherwise, we can
I have
go
a couple
back
of
to you.
questions. I have a couple of questions. So actually, the first thing I noticed is I think this increase, if I'm not mistaken, right, some of the like when we say we're seeing an increase in Spark liquidity layer, that sounds like that is like miscounting USDS out of circulation, right? Like that's USDS kind of not held by a user, but held by like held in a way that basically is more like it's what do you call that, authorized but not issued type of way.
Yeah. So what we show on mainnet is the total, and you're right, it's got some of the pre-minted USDS. We actually do have a dashboard that shows the breakdown of that. So if I showed you the total Spark liquidity layer holdings for USDS, but also for SUSDS, you can see it's sort of that, it was that pre-minted amount of 100 million and 200 million. That's almost exclusively ended up on base. And I'm going to try switching screens here to show you um, how you can see the breakdown of that. But we've got a dedicated accessibility rewards dashboard, and hopefully you're seeing another screen that shows you the holdings of USDS and SUSDS on base. And you can see the flow. Originally, what gets pre-minted on that Spark liquidity layer, it flows into the ALM, and you can see that for both USDS and SUSDS. It's then redirected to the PSM, and then as external demand comes in, it comes out of the PSM into the various protocols or integration partners in the market. And you can sort of see how that trend has been playing out. Yeah, hopefully that answers your question, Rune.
Yeah, but I mean, I think what I'm just wondering is, because this means that there's an amount of USDS reported as being a part of the supply that really should not be counted. Or rather, I guess you could say it should not be counted as demand, which is really what we're interested in
Yeah, that's
measuring
correct.
whenever we're counting the total amount of USDS in circulation.
Yeah.
So the question is, how much is that?
Um,
And is this actually the number on, like if you go to info.sky.money, we should actually reduce that number?
I think, yeah, we do a bit of a dumb analysis with this June dashboards where we just look at the token amounts. But you're right. If you're looking at pure demand, it's overcounted as per what we're tracking on mainnet. I'm not sure what they do on info.sky.money. I think they compensate for it, but I'm not sure.
Yeah. Okay. Yeah, but that's good to know. Like, so we can, if we are not probably counting the pre-minted stablecoins, it's
Yeah,
it's really useful to track that so that we can see when actually, when it turns from pre-minted into end user owned, that
yeah.
we actually track that as growth.
Yeah, and hopefully you can see the screen that tracks exactly that. And it even shows that, when the buffer on the ALM was low, as it was just pre-March, there was a top up on that pre-minted amount that went straight into the ALM, and then you can see how that flows into the wider market. So
Yeah.
great momentum with base up until March. Slowed down a little since then.
And then my other question is, do you think if there's any connection between, like we saw a lot of inflows, right before the big drop. So what I'm curious about is can you get any picture of like the stickiness of those inflows? Like, is it more likely that those inflows were the ones that were outflows later, or is there no connection between the two?
I'm not sure. We're sort of reacting like, unfortunately, with June, we don't get this in real time. It's sort of 2 days behind. So we need to do some analysis to sort of further understand what's really driven those outflows. As I mentioned, normally we're sort of able to pinpoint it down to a few users and a few key trends this week. And we haven't been able to do that yet. It sort of seemed to be a little all over the place, to be honest.
Mm.
We saw it
Yeah, I mean, I
with
think
that.
it's good. Overall, that to me seems like a good sign that it would be more, um, like it would be a worse signal if you had one large user like putting in a huge amount and then that one single user pulls it all out again. Well, this actually like if it's more mixed, that seems like it could be more like we, we simply are having like a good momentum and we're having steady inflows. Of course, it's not as much as like it's not a billion per week, but maybe it's as much as a couple of 100 million per week, which is also really great. Yeah, so let's hope that continues. Okay, well, any questions from the chat to the demand analysis? Otherwise, you can check in next week for the next report as we continue following it in real time. Okay, good question. So why are there pre-minted USDS in the first place, and do we pay stability fee? Yeah, so the reason for this is because, and actually this is how a lot of the long-term SUSDS, like the cross-chain SUSDS system, is going to use this. So there will be a lot of pre-minted USDS in the long run that are all like, they're going to be like minted, so they exist in a sort of a physical sense, but financially they should not be counted. And actually the really basic reason for this is it's about, like, I guess you could say it's gas efficiency. There's actually also something like this in how the PSM works. I'm not sure. I'm pretty sure that's also not counted, but there's also something around, like, yeah. But so it's basically like that. Yeah. So it's the reason why the pre-minting thing exists for the PSM is for a different reason. So I'll just skip that. Don't worry about that. But that's also basically gas efficiency. But when it comes to cross-chain sky savings rate, you need to pre-mint the SUSDS and the USDS because the minting can only happen on Ethereum mainnet, but you want people to have that feeling that they can instantly mint it on the cross-chain domains, right? So when people go on Base, the user experience should be that you have USDS and then you can just push a button and you turn it into SUSDS. But what's actually happening is you're going through a converter. So you're actually like swapping your USDS for SUSDS in theory. And then that's happening with a bunch of pre-minted USDS and SUSDS on each side. So it's like basically like a marketplace. But it's also like it's artificial in the sense that it's not market makers. It's not even like Spark that is providing that liquidity. It's just Sky sort of directing Spark to make sure that this liquidity remains available. And so that also means that Spark is not paying stability fees in this. And also they are not counted in most places, and hopefully not counted on info.scatter-money. But if not, eventually over time, the dashboards will probably reflect these pre-minted assets as basically being financially non-existent. And then the last thing to mention is that the current solution that is being used on Base and Arbitrum, and maybe will be used on a few other blockchains, is a temporary solution. So it's like one that's actually directly run by Spark, which is not how it's going to work in the long run. So in the long run, it's going to be more like, it's going to work a little bit the same, but instead of being Spark running it, it will be Sky directly running it through a fully automated process. Yeah, and there's a bunch of technical details around that. The key point is it will not show up in dashboards and so on, right? Like the tokens that are pre-minted should just not be counted at all. And then secondly, the end users just will not care about it, right? It will, through an end user, it will just feel like you can do the same thing on L2s and on cross-chain places like Solana. It feels like when you're using those and you're using Sky there, it feels like it's fully native and you don't have to care about whether, how it's working under the hood and how things are being bridged and so on. Yeah, okay. Yeah, that was all. That was good questions related to the demand. Then I guess we can jump into allocation system, and also any other. Literally any questions people have about anything at this point. But the kind of topic I want to focus on that I prepared a little bit for is the allocation system, and then of course also the upgrade and all of the staking upgrade, all of the stuff related to that. Yeah, no. So I will. Let's just start with this question written by Vance here and get into that. So, all right, I'll read it out loud. A question on the allocation system and getting the stars properly capitalized. On Discord, we discussed tapering the burn/staking rewards down once SPK goes live and Sky farmers can earn SPK tokens. how long do we anticipate needing to capitalize the star surplus buffer before most profits can flow to buybacks versus capitalizing the buffers? Any additional updates on the risk models as well and the leverage stars will get? Okay, so a couple of questions. So I mean, the first question of like how long it will take to kind of finalize all the stars, capitalize all the stars, and reach the moment of zero fixed expenses for the core. I mean, it's not possible to say exactly how long it will take, right? But the goal is to have it done, and I mean, it is certainly going to be possible to have all of this finalized and um, basically have it in like a complete steady state before the end of this year, so that there's going to be no changes before the end of this year, and there's going to be no like possibility that after 2025 there can be some new change to like some new governance change that results in money being diverted out of the system in some way that doesn't conform with the treasury management function. So once we get to 2026, like everything will be sort of like there's going to be some exceptions in related to like, for instance, cross-chain liquidity. Actually, there's going to be a possibility of some exceptions like that will be, but the point is they will all be kind of written in the rules and like written in stone at that point, right? And then the treasury management function, which is the mechanism that distributes all revenue and like all net revenue for the system, is going to be pretty well defined at that point, and then the system will follow that, the treasury management function, which ultimately is going to be a relative function, right? So where funds go and how much funds goes where is all going to determine on how much money is the system making. So you don't have any possibility of more expenses than income, which would result in no burn and no staking rewards. But instead, there is basically like an almost 100% guarantee that there will always be some level of buyback and some level of staking. Yeah, and of course, everybody wants that to happen as quickly as possible, but it also takes a huge amount of investment. Like there's so many pieces of the puzzle that has to be in place before it is safe and reasonable to commit to absolutely no more changes to this kind of stuff. Because there's just so many moving parts, right? There's so much value and so much momentum in the gigantic ecosystem, and that all has to get all of those pieces have to be sort of shepherded into a place where it's ready to survive on its own and sustain by itself. Because then we kind of get the best of both worlds, right? We get a lot of growth, a lot of teams executing with capital and with strategies and with clear paths to how they will get profitable. Meanwhile, the core infrastructure of the system is no longer doesn't have like governance uncertainty around what are like remaining sort of hidden costs and things that still need to be invested in or dealt with and so on, right? Like the core will at that point be sort of unencumbered in the sense that it's completely clear what expenses it has to deal with, and that the majority of income goes to just goes straight to buyback and staking. Yeah, so that was just the first question. So yeah, well, and then there's a question around what's happening with the risk model and leverage that stars can get using the allocation system. And I guess I will be talking about this, but more like practically how it'll work once the risk framework is ready. So in terms of the timing, the risk framework is like an extremely crucial moment when that actually gets finished and gets proposed into the Atlas. And I know that the teams are working on that right now, and they have I think it's like a solid, like better, exceeding my expectations in terms of how the just like the very first model, which is still going to be relatively crude, what that's going to look like and the type of activity it's going to enable for the stars. And in terms of then how much leverage that gives stars, I guess it's not really possible to summarize that, because the whole point is the framework will kind of determine that for each each of the different protocols. But from what I've seen, I think it looks like very reasonable. And also, obviously, the objective is that as the model comes out and start to use it, and projects and community members, they look at different DeFi opportunities and they plug their data into the model and they calculate the capital ratios. Then when outliers are found, like when there are situations where something is off and like let's say a DeFi protocol that's clearly pretty low risk is actually given a leverage that is a bit on the conservative side, while others seem to be more properly priced in the risk. Then of course that needs to be modified, right? And that's actually the best part, is once it gets out, it's going to be really easy to crowdsource a lot of info to modify it and improve it. And the better the ecosystem gets at continuously trying it out, gathering the data, then finding patterns and finding information from that data, and then using that to take actionable steps to improve the system. I mean, if we can get the sort of the flywheel and that going, that's gonna be the unbeatable moat if that gets going, right? Like nobody else has anything like that in crypto or even in like the financial system as a whole, right? Because this is a situation where we are open sourcing all this knowledge and then just capturing the value from it through pure scale, right? Rather than trying to have some little tight-knit group of insiders that try to hoard knowledge away from others. So I think that's really exciting and a really huge potential. Yeah, there's a lot to say about the risk framework. It really is like a very complicated but like monumental moment in time when we get just even the first version of that out. All right. Then I'll just answer this other question here, and then I can jump back into my Scali-Draw diagram. So the question is, are there plans to integrate the Cosmos ecosystem with all its interchain protocols? Just saw that Cosmos is one of the top 4 in regards of development activity on GitHub. So I don't know. I mean, many of you probably know the answer or can guess the answer to this, right? But the answer is basically that this is up to a founder and investors choosing to tap into this through the Sky Agent framework and through the creation of a star. And so I actually know that there are some Cosmos chains that are that basically are interested in allocating some capital and providing capital and support to potential star founding teams that would build in Cosmos. So the bottleneck there are actually founders. And one of the things that's coming in the next couple of months is basically a program to try to begin onboarding founders into the Sky ecosystem, because there now is this sort of increasing pool of opportunities where founders can go and actually get capitalized, get funded, and get a lot of support in order to build a profitable business with a star by, for instance, like tapping into the opportunity of building in Cosmos and getting the support from Cosmos, and also bridging the gap between Sky and the DeFi risk-adjusted return opportunities that undoubtedly exist out there in the Cosmos ecosystem. Yeah, and then there's also questions about Skylink. And actually, I mean, I guess there are currently no updates on Skylink, but something's coming, but it's just not ready to be announced yet. So I guess the answer is that for now, there are not really any updates on Skylink. Other than, I mean, I can repeat what I said earlier, right? Which is that currently we are basically using a temporary solution that bridges to Base, Arbitrum, and possibly a few other chains, which is managed directly by Spark in a kind of interim setup. But yeah, like the full long-term, full-scale Skylink system is still in development, and there are no more updates on that currently. Yeah, but when it's ready, it's gonna be really cool to have like unlock the full cross-chain capability of Sky and USDS. All right. Let me share my diagrams. Yeah. So here so this is where we left off, right? You have stars, and then they have these sky primitives that on this side, you have the sky primitives that help boost the supply. And on this side, you have the sky primitives that help boost the demand. And this is the stuff where, like Rajiv, for instance, is a part of tracking all of the demand coming in. And then basically, if you look at all the charts and all the kind of like how some demand comes through Aave, other demand comes through other places, basically, because it can be tracked where the demand comes from, it's possible for Sky to then pay this accessibility reward. So this is a really interesting business model that's relatively easy to tap into and to sort of grasp, right? That as a builder, you can find a way to help bring more users to USDS and then get the accessibility reward as a stable and reliable income source. But now I want to talk about, wait a second. There it is. The allocation system, because that's, of course, that's the really important thing that really sets Sky apart, because it doesn't matter if you have a bunch of demand if you're not doing cool stuff with it. And that's really the thing that Sky can do to a very large extent, because it's fully decentralized and because of all the work that has gone into building the underlying data infrastructure for the Atlas and for the star artifacts and for Powerhouse, which is the sort of the data sharing system. And then what you see here is like a kind of funny diagram of basically all of the, obviously it's actually extremely simplified. So it's like overly simplistic, and the reality of how the kind of the data flows that go into the allocation system is actually much, much more complex than this. But it's kind of shows in a very broad outline of like all the different inputs that goes into how a given star will allocate from the Sky collateral portfolio in order to optimize its own return, primarily, right? So of course the way it works is that the stars, they all just operate based on their selfish interest, right? So they're not expected to kind of like do the right thing or do something for the greater good or something, which I think is like the pitfall that all the early DAO experiments failed so horribly at, right? Is that you had this assumption that people would want to do a bunch of free work for the greater good, while a bunch of other people just were like chilling and doing nothing, or maybe even kind of extracting value through politics and that kind of stuff, right? So the star model is instead that, I guess it's more libertarian or something in that sense, right? That it's like everybody should just focus on delivering value to themselves, and then the kind of ecosystem as a whole just passively benefits from that. So now you get a really, really nice and really solid alignment of incentives. So this system is actually about how the stars optimize their own profits, but it exists because it in turn helps optimize Sky's ability to deliver profits to Sky holders and then savings rate to USDS holders. And yeah, I mean, I can just go through it very quickly, right? But well, I want to start with like the really cool part, right? Which is right here in the middle of it. So everything basically is just you have a bunch of data that includes things like the base rate, but it's also like how much risk capital do you have available. So this is the thing, this is the question of like how much leverage do you get, right? Because the risk capital is kind of the risk capital is your own money, and then the question is, beyond your own money that you're putting on the table, how much extra can you borrow from Sky at the base rate, which is cheap, relatively cheap, and that gives you your leverage. These two things, or rather, well, no, okay, that doesn't give you a leverage, but rather this is kind of you have your own capital here, and then you have all the capital you can borrow from Sky here at the base rate, which is pretty much infinite that you can borrow in theory. Then you have the conduits, which are all of the opportunities. And so that is, I mean, for Spark, for instance, that is, they obviously have the ability to deploy into Sparkland. Then they also have the ability to deploy into Aave, deploy into Athena, Maple, Morpho, and like tons of others. Like I'm not currently, I don't remember off the top of my head all the protocols they're deploying into, but it's quite a lot currently. And it's just the really, really early stages, right? So there's just at the very, very beginning. And then of course also one thing is really important to mention is of course also treasuries, right? So not only can you use the allocation system and the conduits to deploy into on-chain DeFi opportunities, but you also can use them to deploy into tokenized RWA. So also TradFi opportunities. And that's like, that's a crucial part of what makes Sky great, is that it gets to tap into the best of both worlds, of both DeFi and TradFi. But then one of the crucial, I mean, I guess, and this is, so basically on a per conduit basis, you basically get to figure out your leverage. So that's actually this thing that basically, like if you understand the capital ratio needed, so this is like how much of your risk capital you need. So this is basically how you get the leverage. If you know your risk capital, or you know how much risk capital you can, for instance, rent, like you can access, and you know how much capital you need, like sort of minimum capital you need per like $1 of exposure is the way to think of it, or maybe per $1 million of exposure, however you want to think of it. So this is a percentage, right? This can be for something like USDE or USDE exposure. This is a couple of percent as far as I remember. So let's just say for simplicity, it's 3%, right? Then if it's 3%, what that means is that you get 33x leverage on this. Yeah, okay. Now that I think about it, it's probably more than 3%. Like when if you think of like the Morpho vaults, those are at like maybe 10%. So let's say it's 10%. In that case, you get 10x leverage, right? So then on USDE, you get, you have some fixed amount of risk capital. Then on USDE, you can get 10x leverage. So that means like, let's say you have 10 million in risk capital, that would allow you to deploy 100 million into USDE if the capital ratio is 10%. But maybe you want to, instead, you can deploy into Aave, and then Aave is based on gives you a better capital ratio of, let's say, 5%. So as a result, you can do 20x leverage. Now you have like a kind of a choice, right? Do you want to deploy into USD at 10x leverage, or do you want to deploy into Aave at 20x leverage? And then the question is which one you want to do is that depends on the return, right? So the question is, do I basically get I mean, this is overly simplistic, but basically if you get double the spread of deploying into USDE, but you get half the leverage, or I guess if you get more than double the spread, but you get half the leverage, then in a sort of overly simplified example, you're better off deploying into USDE. But if you get less than double the spread, you're better off deploying into Aave. More or less, right? Because you get double the leverage. So the question is, like if you get double the leverage on Aave, then you're better off deploying into Aave unless you get half the spread. Or you can think of it the other way, yeah. So that's like the really basic kind of question and the really basic decisions that lies at the core of the allocation system, right? That at all times there's so many different opportunities existing all around the DeFi economy, and you can really like calculate your way to which ones are the best ones to deploy into. And instead of Sky trying to solve all that by itself, you have all of the stars doing that individually, and also crucially, having them put up their own risk capital. So the stars are the ones taking the risk, like taking sort of the risk of first loss. So Sky is really well insulated, and USDS is really well protected as an asset. Okay, let me just see if yeah, so you can put. Oh, wait a second. Is there?
There's a
So I see that there are
questions
a bunch of
module on
questions.
the right. Yes.
Yeah, if I click on the Q&A, there's a bunch of questions.
Mm-hmm.
Okay. Yeah. So I mean, we are towards the end of the call. So I will just quickly make one more point here. So 2 points, right? So the first one is, how do you determine the capital ratio? That's through the risk framework. So there initially are going to be 3 really important different types of like risk modules, I guess you can call them. One is look at the smart contract risk. Another is the admin risk. So this is like backdoor control, governance risk. And then financial risk, which is like risk of getting liquidated and that kind of stuff, like risk of the asset crashing too fast and so on. So that means you can look at the data of the assets in real time, and then you can calculate your capital ratio, and then you can just get the return at any time just by like checking on chain what is the what's the yield on Aave, what's the yield on USDE, what's the yield on Maple, and so on. And then you get all of that data for all the conduits, you figure out how much leverage you can get on all of them, and then that becomes all of your that becomes all the data that you take as input. And then based on that data, you can figure out what is the optimal allocation right now based on what's happening. And that then you can use that to figure out, okay, how do I change from where I am now in terms of my portfolio towards the ideal state. And that results in this like the best set of actions on the so-called beams, which are basically the modules that allow the star allocation systems to rebalance in real time. And the whole the most important thing that, I mean, the $1 trillion question for Sky is that this thing, well, actually all of it, so the whole thing zoomed out, like all of the data scraping and data gathering and data consolidation, and then the planning based on the data and the decision making based on the data, all of that has to be automated with AI and has to be continuously improved, right? Because this is a process that should, to the extent possible, happen in real time, right? So that Sky is just constantly allocated in the best possible way. And of course, that doesn't mean like wantonly sort of rapidly rebalancing back and forth, because that's also going to be inefficient, right? But rather considering all factors, like making sure that the protocol is properly balanced instead of being too slow, which is something that has happened quite a lot in the past with Sky and with Maker, right? Where the governance process was very manual, and then it was very slow to kind of like onboard new collateral, modify rates, and that kind of stuff. That the long run aims to be that it's actually the fastest of all, right? Because it has the most direct access to all of the data and has all of the stars all taking actions independently. And as a result, the ecosystem as a whole can just move extremely fast. Okay, now I will just quickly try to answer the questions here. So, okay, so in the past 2 weeks, Sky spent 13 million in expenses. What is this being used for? I know the goal is to cut costs to 0 by end of year, but how will that be attainable given Sky and stars burn around 100 million per year? So first of all, actually, I think the most important thing to call out is that a lot of what looks like expenses currently are really integration boost and liquidity costs. So what that basically means is that, for instance, when people deposit onto Aave, if they deposit USDS on Aave, or if they deposit USDS on Camino, on Solana, for instance, then they like earn USDS tokens as a kind of yield farming reward. And that's actually like paid out of Sky through like a manual process run by GovOps, like a half manual process run by GovOps, where basically USDS is first transferred from the protocol into a buffer, and then from that buffer sent to these teams, to Aave and Camino and so on. So I think that is around 30% of the what looks like the expenses, right? So the real expenses are about 30% lower. Then there's also some other stuff. Like if you look at the yearly expenses, there's about 10 million used for liquidity that is basically going to get returned at some point. But then the rest of it is basically what I was talking about before, right? It's all the investment that is being done into preparing, capitalizing, like finishing off all of the projects that, to get them to like a mature enough state where they can go out, fundraise on their own, generate profits on their own, and basically remain self-sustainable. And I mean, the good news is that, I'm obviously running the math all the time. And from my perspective, it does seem completely realistic to actually keep everything alive that needs to be kept alive. I mean, there are a few processes that are like literally will just end because they will not be needed anymore towards the end of this year. But actually, most of all of the really valuable work and all of the highly talented people, they can actually all remain 100% committed, just giving it 100%. With all the resources they need, yet the core will no longer need to continuously spend more and transfer more cash or like basically sort of engage with them at all through governance, but rather they become these like self-sufficient, self-sustainable, funded structures and entities that just like use the protocol and interact with the Sky primitives and so on. Yeah, so I mean, and I know that's kind of crazy. In fact, it seems impossible. And if you told that to anybody in the DAO space, I would generally expect them not to believe it, because it just does sound totally impossible and sounds like not, against anything that's ever happened. And it sounds like the kind of thing that basically a couple of years ago, a lot of people just concluded, yeah, this just can't be done. Like you can't really achieve the sort of the dream of a DAO that runs itself and doesn't need politics where you have bureaucrats disputing over who gets what resources and that kind of stuff. But it does, I mean, yeah. I mean, there still will, I mean, you still have to deal with the so-called core executor agents. So there's still going to be some small scale politics at the Sky level, right? There's delegates as well, right? So there's a couple of things that Sky holders have to choose and make sure runs smoothly and doesn't fall apart. But it's just like orders of magnitude less complex, and it doesn't involve gigantic opaque budgets, right? That normal people have no chance of understanding. Okay. Yeah. Okay. I'm not going to be able to answer all the questions, I guess. Okay. So if a star wants to enter into a partnership with a lending protocol which does not have any USDS liquidity, do we also use allocation system to pump that liquidity into the protocol? And the answer is yes, of course, right? So that's a really good way to seed USDS, but actually even more importantly, it doesn't have to be USDS. In fact, most of the time it will probably be USDC, right? So when Spark, they deploy into Maple, they deploy with USDC. So Spark uses its allocation system to generate USDS, and then it converts that to USDC through the PSM, and then it deploys the USDC into Maple. And this is actually kind of the most powerful aspect of it, right? So it's totally agnostic in that sense. The allocation system is just going to chase down literally every single source of mispriced risk-adjusted return anywhere in the ecosystem, right? And really just like get all of the places where there is some like outperformance to be had, right? Where the rates are a little bit wrong and you can get a good rate without having to take so much risk, and the stars will just exhaust all of that, right? That's the goal, to just make it maximally efficient. But it can also be used strategically to kind of like build up a business relationship with a new protocol, or like bootstrapping a new market, and even to kind of like promote USDS over other stablecoins potentially. Yeah, actually, it's 9 o'clock, so I was just about to answer the next question, but I unfortunately have something coming right after this. So that's basically it for me. But we can
We'll keep them
save
for
these
the next
questions
session.
and we can talk about them next time.
For sure, we'll do. Thank you, Civic Sage and Dash for the questions. We'll keep them for next time. Thank you everyone for joining, and we'll see you soon.
Thanks, guys. Have a good day.